Kelly, thanks so much. And John, thank you for being here with us today.
Thanks, Kate, for having me. Great to be here.
So you're on the road on this hiring tour. What's the tone been like out there? Are workers showing up? And do you think you'll be able to get to that 20,000 number in this environment?
It'll take a little time than just this 1 week's tour, but the great thing about the momentum we built in our brand in recent years is we've created this incredible family environment. So presently we enjoy this sort of home away from home for guests in our neighborhoods, and our employees come from those same neighborhoods, so people tend to know each other and serve each other and create this incredible warmth and hospitality that's made this a great place to work. And as a result, our turnover has been a little bit lower. So while a lot of people face some pretty strong headwinds on staffing, as do we, maybe we don't have it quite as bad as everybody in the industry. That said, 20,000 employees is a big number. And so we hit the road with our mobile relief diner that we usually use for disaster relief, where we've served some 40,000 people in disasters in the past few years. And we put it on the road just to create awareness around the fact that we're open for business and hiring. And at the end of our last quarterly call, we talked about how we are always open at Denny's, save for a few stores that can't be. And so even then, about a third of our restaurants were back to full 24 hours. So we're busy getting people back to work. And we want to raise awareness about what a great place to work the Denny's is. And that's what this tour is all about. It is underway. And to your question, it's going pretty well. The tour, people are coming out for the free red, white, and blue pancakes when they put in an application. But at the stores, 1,600 stores across the country, they're going in there to get also a nice little perk. The first 25 at each restaurant gets that free pancake breakfast with an application. And we've seen quite a bit of activity just in the past few days.
You mentioned about a third of your restaurants are back to full capacity operations, but it sounds like you are having to pull back a little bit. Is that over these staffing challenges? We're hearing that a lot from companies large and small, that they can't staff adequately, to stay open as often as they'd like, especially heading into the summer. Is that something that you're facing right now as well?
We are facing that. And with anything, you have to be grateful for how things were managed. There were PPP loans, there were employee incentives to cover them, to make sure families got fed during this. And now coming out of that, it's taken a minute to unwind and get back on track. So there are some staffing challenges. We do think they're temporary and they abate over time, but we want to, again, make sure that we get those people in and around their neighborhoods to think about Denny's as they're going back to work coming out of the pandemic. And I think how we manage this going in really helped us too. I'm sorry.
I'd like to get your thoughts on food inflation. We're just seeing prices going up across the board here. I'm curious how that's impacting Denny's and your operations, and if and when consumers will start seeing that in your restaurants.
Sure. They start to see it pretty soon because, chains, larger brands are going to take 2 to 3 times a year where there's opportunities for new menu updates where pricing could be slipped through. Our last menu update was in June. We did take some modest price to cover some of the wage and commodity inflation, and then we'll look at that again later in the year. Normally, it's about 1 to 3% a year on commodities, and wages been running just, in that range or slightly higher in some states. And so, modest pricing usually takes care of that over a couple of menu price cycles. If you move too quickly, it can have some traffic consequences. If you move too slow, you have some margin consequences for your franchisees. So we tend to do that. We think this environment will be a little bit above the normal level. We've not guided yet. To give you some example, normally we're maybe 70% locked on our market basket. Right now we're only 60, just because we have to leave a little room for some market corrections. Our proteins make up about 47% of our total market basket, and a good portion of those have been affected with the fast ramp up coming out of the pandemic.
For John, for people who are out there wondering, what do you pay? How much higher have you had to pay this year to attract workers, and how much of that inflation that we were talking about is directly attributable to wage inflation?
Wage inflation is going to drive a lot of it in restaurants and retail, and then on your segment just before this, oil will play a role over time, already sort of hitting the gas pumps. But as inflation hits the market, employees, especially at the beginning and entry level, need to see their wages rise too, so they can, have quality of life in the marketplace. So we're proud of our, wage programs at Denny's. We believe that wages should rise with the markets, and as long as it goes in step with the markets, not too far ahead of it, then we're able to.
So
manage
give me an
that
example.
well.
What do you pay? I mean, it may be market by market, but what do you pay, and how much higher is it than it would have been 2 years ago, for example?
Sure. Versus a couple years ago, take California. That's pretty easy to calculate. When you're at 11 going to 12, that's about a 9+% increase in 1 year. Then there's a ratchet effect across it, but then across the whole country, it might have been closer to the in that 3% range in wage. Post-pandemic, it'll be on the higher end of that range.
Shepard Smith here. Thanks for watching CNBC on YouTube.